Evergrande was once the largest real estate company in China, but now it has fallen into crisis and has been delisted from the Hong Kong Stock Exchange. This collapse not only ends a giant real estate corporation, but also raises widespread concerns about the future of China's economy. Evergrande was established in the year 1996 in Guangzhou and quickly became one of the largest real estate development corporations in China. By the year 2009, the company officially listed on the Hong Kong Stock Exchange, opening a period of rapid expansion in both scale and reputation. During its growth phase, Evergrande not only launched hundreds of housing projects across provinces and cities, but also expanded into many other sectors such as electric vehicle production with the brand Evergrande New Energy Auto Financial Services, asset management development of the Guangzhou Football Club, and even the entertainment industry. This diversified conglomerate approach was once praised as proof of the dynamism of Chinese enterprises during a period of rapid urbanization. At its peak, the financial figures clearly reflected Evergrande's expansion. In the year 2020 alone, the corporation recorded revenue of about 507 billion renminbi, equivalent to 77.7 billion US dollars. Total assets reached more than 2,301 trillion renminbi, which is about 306.4 billion US dollars. At one point, market capitalization even reached nearly 51 billion US dollars, making Evergrande one of the largest and most valuable real estate companies in the world. However, this impressive growth was mainly fueled by borrowed capital to expand operations. According to reports, by the end of the year 2022, Evergrande's total financial obligations had reached about 2,430 billion renminbi, equivalent to 340 billion US dollars. With such massive debt, many analysts considered Evergrande the most heavily indebted real estate company in the world. It is worth noting that while revenue sometimes grew impressively, actual cash flow could not keep up with the pace of project expansion. This created a vulnerable financial structure. If new capital was restricted, the entire system would face a liquidity crisis. This risky financial reality only awaited a policy shock to reveal its weaknesses. And the decisive trigger came in the year 2020 when the Chinese government issued a series of strict credit regulations, opening an unprecedented crisis period for Evergrande. In the year 2020, the Chinese government introduced a new financial management policy called 3 Red Lines, a mechanism to closely monitor the borrowing levels of real estate companies. The goal was to limit excessive borrowing and ensure system safety. However, this policy caused corporations heavily dependent on credit, such as Evergrande, to quickly fall into liquidity shortages as they could no longer raise new capital to sustain operations. Starting from the year 2021, signs of crisis became evident. Evergrande lost the ability to repay certain international bonds, causing global financial markets to become worried. A series of construction projects were halted severely, undermining the confidence of homebuyers and investors. In response, international credit rating agencies such as Fitch Ratings and S&P Global repeatedly downgraded Evergrande to CCC/CC, reflecting extremely high default risk. By the year 2023, Evergrande's massive losses were publicly reported. Financial statements showed the corporation had a net loss of about 476 billion renminbi, equivalent to 66.3 billion US dollars in the year 2021, and continued to lose an additional 105.9 billion renminbi, about 14.7 billion US dollars in the year 2022. At the same time, the company confirmed that total debt by the end of the year 2022 had surged to 2,430 billion renminbi, roughly 340 billion US dollars. These figures not only reflected Evergrande's exhausted finances, but also highlighted the severity of risk across China's real estate sector, which relies heavily on debt-driven development models. As losses continued to balloon and the debt burden exceeded its capacity to manage, Evergrande's collapse became a matter of time. The climax of the story came in the year 2024 when a Hong Kong court had to intervene with a liquidation decision. By January of the year 2024, the Hong Kong court officially ordered the liquidation of Evergrande after the corporation failed to present a feasible restructuring plan for its massive debt. Immediately afterward, Evergrande's shares were suspended from trading. According to Hong Kong regulations, if a company stops trading for more than 18 consecutive months, the stock exchange proceeds with delisting. Therefore, on the 25th of August 2025, the Hong Kong Stock Exchange officially announced Evergrande's removal from the listing, marking the end of an era in China's real estate industry. The sharp decline in market value clearly reflected Evergrande's downward trajectory. At its peak in the year 2017, the corporation's market capitalization reached nearly 398.8 billion Hong Kong dollars, roughly 50 to 51 billion US dollars, making the company one of the largest real estate developers in the world. However, just before delisting, the market value was only about 2.15 billion Hong Kong dollars, approximately 260 to 280 million US dollars. This almost complete collapse showed that investor confidence had been severely lost and demonstrated the rapid speed at which a once dominant corporation could fall. The liquidation process further highlighted the huge gap between assets and debt obligations. According to reports, Evergrande was only able to sell about 255 million US dollars in assets to pay creditors, while the total claims from creditors reached 45 billion US dollars. This massive discrepancy not only illustrated the deadlock in financial recovery, but also served as a clear warning about the risks of over-reliance on debt leverage for expansion. This reality also posed a major challenge for regulators because handling a corporation of Evergrande's scale is not just a business issue, but also a question of macroeconomic stability and financial system confidence. Evergrande's collapse not only concluded the story of a single corporation, but also sparked broader debates about the consequences for the entire real estate sector and China's economy. According to many Western analysts, the Evergrande case is seen as a symbol of a growth model overly reliant on credit. When financial control policies change, companies with high leverage immediately reveal their weaknesses. This event triggered a ripple effect across China's real estate sector, a field that accounts for roughly 1/4 of the national GDP. The consequences were not limited to halted housing projects, but also extended to related industries such as construction building materials and even raw material prices like steel. To mitigate the impact, the Chinese government implemented several support measures, encouraging local authorities to accelerate the delivery of unfinished projects, allowing credit loosening for healthier companies, and considering stimulus packages to stabilize the market. However, according to multiple sources, the recovery pace remains very slow, and more importantly, public confidence in the housing market has been eroded, something that is difficult to restore in the short term. From another perspective, many experts argue that Evergrande's collapse is not merely a corporate bankruptcy, but also a warning about the consequences of lax regulation and debt-driven growth models. Some other large real estate companies, such as Country Garden, are currently facing similar liquidity pressures and risk entering the same crisis spiral. Domestically, Evergrande's collapse shook the real estate sector and market confidence, while internationally, this shock left significant after effects on global finance and supply chains. The Evergrande crisis was not confined to China alone, but also created ripple effects in international financial markets. Many banks, investment funds, and foreign contractors that held bonds or contracts with Evergrande had to record significant losses. According to some estimates, just the corporation's international bonds were valued at tens of billions of US dollars, directly affecting global investors when the company defaulted. Beyond the financial sector, the shock from Evergrande also impacted global supply chains. The construction materials industry, especially steel and cement, had relied heavily on demand from China. When real estate projects were halted, steel and many raw material prices in international markets fluctuated sharply. This not only caused instability for domestic producers, but also affected exporters in many regions from Southeast Asia to Europe. In the long term, analysts suggest that the Evergrande incident will force China to adjust its growth model. Instead of relying on real estate as the main driver, the economy may have to shift strongly toward other sectors such as high technology, clean energy, or domestic consumption. This is considered an important turning point, but also a challenging one, as large-scale economic restructuring always carries risks related to employment capital flow and social stability. From Evergrande's collapse, China's real estate sector is facing a structural turning point. With official delisting, the brand has become a symbol of failure for the debt-driven growth model, at the same time providing a clear warning that other corporations need to develop more sustainably if they want to avoid a similar fate. So in your opinion, is Evergrande's collapse just the story of a single corporation, or is it a sign of a larger crisis in China's economy? Share your thoughts in the comments section. I am eager to hear your perspectives. If you found this content useful, don't forget to click like, subscribe to the channel, and turn on notifications so you don't miss the latest analyses on economics, finance, and international events. Thank you for watching, and see you in the next videos.